Hi, I'm Brett Carleton. I want to welcome and thank you for joining us for this year's Summer Market Perspectives. What a great time of the year this is as we celebrate the 250th anniversary of the Declaration of Independence, the birth of the United States. And what a great country we live in today. It seems like there's so much controversy going around right now, but think back what we have gone through as a country, as a people, what our Constitution has held up to through 250 years. So from all of us here at Heritage, we want to say, Happy Independence Day, and we hope that you're able to get out with family and friends and maybe enjoy some of the celebrations, whether it be in person or virtually or even on TV. So happy Independence Day from all of us here at Heritage. I'd like to take just a couple minutes and talk about some of the economic data that has come in over the last quarter. And as last quarter I was talking about tensions in the Middle East, this quarter we're talking about an attempt at peace. But as we've gone through these negotiations, what we've seen is energy prices, oil in particular, dropping from well over $100 a barrel to around $70 a barrel, which is where oil prices were at the start of this. And with that have followed gasoline prices, and I think what we'll see here over the next few months is the impact that energy has on many prices begin to drop. And that's really, really important because that leads into inflation. We had this trend the last several years where inflation was coming down. In the last couple of months, with oil prices being higher, we've actually had an increase in inflation. So I do think we will get back on that trend of declining in inflation, which is a very positive economic indicator. One thing that I haven't heard a whole lot about, but is employment. The employment numbers are so strong, and we actually are either at or near an all-time record high of how many Americans are actually working. And if Americans are working, they're spending money, which is good for for companies and earnings and all of that. So again, that is another very positive leading economic indicator, is that people are working. This quarter we also had a new Fed chair who had his first meeting, and we just had that announcement last week. And I've spent several hours here over the last couple of months just listening to speeches of Kevin Warsh, interviews with Kevin Warsh, and some of his writings. And I'm very confident that he's going to bring the Federal Reserve back to a place of really focusing on inflation, a stable dollar. And that is so important. And that was actually the original Fed mandate. And I think they've lost their course really since the financial crisis. So I'm hoping he will eventually bring us back to a normalization of Fed policy, maybe a reduction in Fed balance sheets. And we'll talk more about that as we go and we get more time to see what he's actually doing. But I'm fairly optimistic about the change at the Fed. And I think the markets are too. We've actually seen interest rates go down in the marketplace. And that's a big positive. The 10-year Treasury has come down some, which hopefully will begin to stimulate home purchases in our country. Something else that's been happening too, really since the tax bill was enacted earlier this year, is investments by corporations into the United States. If you look at the amount of capital that companies are investing in the United States currently, it's about 2.5% of GDP, which is trillions of dollars. And that does have some immediate impact because of construction jobs, material, lots of things go into building out in these manufacturing plants. But the greater impact is long-term because that is future economic output, GDP growth in the future. So that has been a huge positive event or impact that has not just happened this past quarter, but it's been going on for several quarters. And that also comes back to that stable dollar. We need a stable dollar to show international companies as well as U.S. companies that we're going to have a strong, stable dollar here and a strong, stable economy in the U.S. And just an example of that is Apple is trying to figure out how to manufacture iPhones in the United States. And they have been one of the leaders in global manufacturing with parts and whatnot all over the world. So it's really an exciting time for the U.S. and sort of a renaissance of manufacturing. This is a little off economic topics, but if you haven't seen some of these videos of the World Cup fans coming to America, it has been so much fun to go to to X, Facebook, Instagram, TikTok, all of these, and just see what these fans are experiencing, many of them for the first time in the United States. And I think what's happened is media is so pervasively negative that they've come here And I don't know what they were expecting, but they talk about how nice people are and all the things that we take for granted in our life. I never knew that ranch dressing was a thing. They are putting ranch dressing on everything. They're dipping it on everything. TSA has come out and told people you can't take bottles of ranch dressing in your carry-on baggage, which I think was kind of a joke. But no, things that we've had our entire lives that we've taken for granted, the rest of the world is coming and saying, wow, look at what America has. We need to be happy that we're here, that we're Americans. And so it's so exciting to see these videos. So maybe spend some time over the 4th this weekend just enjoying that. And finally, I wanted to mention, today is July 1st. This is the 24th anniversary of the start date of Heritage Wealth Management. And we, the whole team here at Heritage Wealth Management, want to thank you and your families for the trust that you place in us. And so here's for 250 more years of the United States, which most of us won't be here to celebrate that, but maybe 24 more years of Heritage Wealth Management, we can still be working together. So thank you again, and thank you for joining us. Happy Independence Day.